Good morning, everybody. It's Thursday, December 12th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn down 2 at 446 1/4. March soybeans were up 3/4 at 1003 1/2, and March Chicago wheat was up a half at 563 3/4. This morning, we had an export sales announcement of 334,000 metric tons of soybeans to unknown for 24. Also released this morning were weekly export sales. Pretty disappointing, really, outside of the oil market. Corn was below the low end of the estimates, 946,900. Low end of the estimates were like 1.1 million. Soybeans, another miss. Low end was for about 1.5 million. We came back 1,173,800. Wheat came back 290,200. Low end was 275,000. Meal 176,300, and oil 63,800. So, also announced this morning, European Central Bank. They cut their interest rates a quarter point. So they're now at a 3% rate. Outside markets were moving around a little bit here on that news this morning. It's cold outside outside of Chicago here this morning, guys. Ben, I know you got some ice through Indiana, but what are your thoughts here as we start the morning?
We hit up 200-day moving average. We kind of got the information from the USDA that would explain a lot of the recent strength in flat price and spreads. Interestingly enough, cash prices did not really improve on that rally. We've seen basis kind of soften in some places. I think corn is moving again, and you have to wonder if maybe that's we got the cart before the horse for a minute. It felt like in some of the more vocal places, people were really bullish corn, but there was a tremendous amount of volume that's traded between 47 and 51 the last 2 days. So I think corn probably consolidates for a little bit, maybe grinds lower. We've talked ad nauseum about global stocks being tight, less China. I think you got to continue to, I hate to be cliche, but you got to keep feeding the bull. So I don't see a lot of fireworks here until we start finding some more export business, probably slow, quiet holiday markets. Interesting to note that volatility in corn, over a 5-day period, we had a 23-cent rally from 28 up to 51.5. Volatility didn't do anything on a rally like that, and that to me is kind of a sign of no fear, I guess. So I thought that was really interesting. And you're talking about really low volatility levels, so really no panic over there. Normally, you'll see people reach for options, do something like that, and that was not the case on this rally.
Yeah, Justin, anything to add there this morning as we get started?
Yeah, just looking at corn, yesterday we hit the 200-day moving average. So, the first time since May that we've even touched it or tried it. We sold off heavily against it. So it happened to be right also at 451. So we chewed through a lot of farmer selling around that 450 area, like Ben said. Really, that's, I think the 200 days kind of the old school, the trend, right? So if you start trading above the 200-day, you kind of enter into a bull market. If you continue below it, it's a bear market. That's an old school, simple, technical. And we really haven't traded above it. Like if you look at March corn, like the entire contract. We've been in a steady bear market. We tested it in May. This is the first time, like I said, we've tested it since May. If you stay under the 200-day, that's a bear market. I mean, just real basic, real basic fundamentals. So we've, if you're waiting for that kind of a bounce to sell, Ben talked about this, where we retraced 50% of the move of the bear slide that we had from the summer. You're hitting the 200-day, all these kind of things. So I think you're running into you're getting into levels where you got real resistance, real farmer selling, real technical selling, all those kinds of things. So to push above that and start what I would call a bull trend from here, you probably need a little more. We're not getting the daily announcements anymore in corn. I think you have to prove to the market that, it wasn't all just front loaded from Mexico. So that's kind of my take on it. You're at a kind of a neutral zone here.
Yeah, very good. And we continue to hear, and I know we've talked about it a number of times, Justin, but looking out to 25 for budgets and numbers that folks are running, and there continues to be this narrative of beans looking worse than corn. And I guess I had a question the grower we visited with yesterday. Is that due to folks like not wanting to write down a big enough bean yield or bean expectation on their balance sheet versus they get really excited about just coming off a record corn crop? Is there some of that going on in your opinion?
I think so. I think it's a tough environment, so people are apt to say, hey, I can get 250 bushel corn.
Yeah,
like I'll just make that happen. Like that's the only way I can make the numbers work. And they don't have the same confidence on growing beans. So right or wrong, I think that's kind of the attitude right now. I think it's a mistake. I think you should look at your averages and, but I think there's a motion right now and it's a tight environment. So I feel more confident growing 250 bushel corn than I do 60, 70, 80, 90 bushel beans. So, that being said, though, the ratio has, it's saying that we want more corn acres, less bean acres. And I think if you look at the report, you've got a, 1.7 carry out, you've got a tight world balance sheet on corn, and beans are the opposite. So, I mean, the market should be doing what it's doing. It should try to get more corn acres. So if corn flat prices rally, the ratios come down, those are the two recipes that we talked about here. You have to have flat price go up and the ratio go down to incentivize corn acres. And both have happened. So I would expect that trend to continue, to be honest with you. Okay. Especially if South America, if the weather continues to be good and we keep thinking we're going to have a 170 plus Brazilian bean crop, we have to lose bean acres.
Yeah, that's going to be a real interesting fight, for the, as we go into spring and set crop insurances, is corn a $5 type of, is it going to take a $5 number to do that job? Or, is it, does it just go to 450 and it's just kind of sucks,
Well, or is it, I mean, that's the hard part, right? Is it $5 corn for new crop or is it $9 beans?
Yeah, right.
That gets you to plant the corn. It's tough.
Yeah, it's either way. I mean, it's like we, we spent a good part of yesterday visiting with our growers, both on, the upcoming decisions they'll make for government programs and crop insurance and things like that. And I think we need to reiterate that, whatever that new crop scenario looks like, there's things that we're looking at right now before Christmas that, you should probably be visiting on. So give us a shout if it's something you guys, have questions on or want to take a look at, because early planning is going to be the key. Anything else on the grain side, guys, this morning?
I would just say for beans, there seems to be a lot of contention over soybeans rallying out of this trend or breaking out of this consolidation period or breaking down below it. And I think if you look at soybeans a year later, they're kind of replicating how corn traded last year. There's nothing that says we really have to go anywhere as long as we continue to do business and keep ourselves in a place where we're participating. I don't know that we really have to go anywhere in soybeans, and we've gotten accustomed to 50 cent to $1 moves in beans for a while. So I don't know that you want to be the guy who's trying to buy the breakout on or sell the breakout on either side from a trading perspective. I think we may just be mud in the water for a little bit.
Yeah, I guess the hope is too, Ben. I mean, we get through the holidays. It's like, as long as they move, right? Give us some opportunity. The worst case scenario is you get in that tight range and it slodges along to the spring, you know.
Well, to that point, like use what's, take advantage of that, in my opinion. You got super cheap vol, March $11 calls are 4 cents. I mean, there's, we're factoring in like zero movement. So if you have to do something, if you have to move, cash beans or cash corn, there's plenty of options that are the cheapest they've been in a decade, relatively. So try to look at the positives. That's kind of what I'm trying to do is like, hey, at least this is the case. Vol's cheap or whatever.
And I think that's a great point. When you look at volatility in general, from a hedging perspective, you can make really high volatility work with certain things, and you can make really low volatility work with certain things. And the key is to don't be on the opposite side of that, because you're just going to wind up wanting to scratch your eyeballs out by the end of the day.
Yeah. Well, that's a good point too, because, a lot of, commercial products, right? They're accumulators, things like that. You're selling, you're taking the other end of a really bad trade historically, if you're the one selling it. So.
Yeah, I just had this conversation with a merchant from a commercial we talked with, and he sent me some quotes on some May accumulators. He said, "What do you think?" And I said, "I hate it." And he said, "Why?" I go, corn, by the time May rolls around, could be 510 and it could be 410. In either one of those scenarios, you're going to dislike the accumulator.
Mm-hmm.
Right? So,
right. Yeah, there's a time and a place.
Yep.
So now that's good stuff, guys. Running quickly here before we come into the open, still strong cash for cattle, and we're starting to see a drop in open interest in the hogs here. So maybe some things changing a little bit over there. But what are your thoughts as we start the morning?
Yeah, well, it's been a pretty wild ride in cattle. Just been straight up for the past 3 days. I mean, packers have been scrambling to get inventory, paying up, really early in the week, just kind of showing their hand. So I think naturally the board's going to respond really positively to that kind of action. So we saw 191, 192 trade in the south, and even in the north, getting all the way up to 195 in some areas. So overall, you've seen a big jump in open interest, 4,200 cars plus. So it's just, it's been a wild ride. There just hasn't been any kind of real stall out in the cash momentum here. So, and on the investment side, we know managed money is very long. The speculative community is long. So at this point, wouldn't be surprised to see some kind of capitulation, just because it feels like this is a mad dash ahead of the holiday. But we'll see. Maybe there's legs to last us, longer than usual. It just, once the calendar starts to turn from next year, it just kind of feels like usually you see a little bit of a washout. So it's good just to kind of stay protected here overall. Beef prices started to stabilize a little bit. We were down about a half in choice, down 150 in select. And then the export side of the market was pretty good. Net sales of 11,000 metric tons. So overall, there's just a lot of really good supportive news. So we'll see if that continues. Kind of feels like maybe packers have established their price range for the week, but I think most people at this rate that have been holding out are going to want to keep their offers pretty high, just to see if we can get some of these numbers, in record numbers, we should say. But yeah, on the hog side of things, not as rosy of a story. We got D's expiration coming up here tomorrow. We've seen kind of a back off in the exports. So exports only at 22,500 metric tons. So, we're starting to see cash weaken up, carcass weaken up, and it just seems like a lot of that's been kind of baked in the board and seeing some liquidation from the record long fund. So if that's to continue, you would think you would start to see these cash prices start to drop a little bit more here. But right now, demand is firm, and it just feels like overall there's still a lot of things to be optimistic about. Just, I don't think anybody wants to get caught on the wrong side of the trade here. So, just kind of a cautious environment in hogs.
Hey, Ryland, what do you think on poultry?
I don't have a strong opinion on poultry right now, but I mean, we're
just
coming
as far
in.
As like, is it, are they expanding? Or are they contracting?
Well, I mean, we know that like disease has been a real problem. So I think at this point, expansion's really tough, especially areas that have been kind of swept through with avian bird flu. So overall, it just seems like that area is kind of stuck, I would say, from an expansion standpoint. I don't have the hard numbers in front of me. I mean, I could look those up for another time, but I mean, that's generally the sense that I have with the poultry market.
Okay.
Very good. We're going to be coming into the open here. Pretty quiet open here. Down, let's see here.
Down 2 in March corn.
Yeah, there it goes.
Up, down a penny in beans. Unchanged in wheat. There you go.
There you go. I was lost in the slowness of how bad we are, slow we opened here this morning.
Yeah.
Thanks, Justin, for the assist there. A couple things to point out, guys. Tomorrow, last trading day for December green futures. Those will go off tomorrow. And also, we've got a really exciting Fun Fact Friday. You're not going to want to miss this one. Brian's got a real good one teed up for us. So be sure to tune in. That's always a great way to send us off for the weekend. Also, appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. It'll keep you up to speed on everything that's going on with AgYield. Doesn't cost you anything to do so. So click on that like or subscribe for us. We certainly appreciate that. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.